All right, bull runners, welcome back to the channel. So, wow, what a day in the market. Bitcoin dropping, down to 40K, Ethereum down 7%, XRP dropping all the way back down to 60 cents. We're sitting at 61 right now. The whole market taking a hit. What caused this? What's happening? What's likely to happen next? And how do you prepare? Because when we talk about Google updating its crypto ad policy ahead of the possible Bitcoin ETF approvals, is Bitcoin signaling that they already know that the ETFs are going to be approved, so they're preparing on their advertising platform? We're going to be talking about that. We also have to share with you a bill that Senator Elizabeth Warren is introducing to crack down on crypto, what happened in the markets for liquidations, what the Fed is planning to do next at their December 12th through 13th, so tomorrow. In less than 24 hours, the Fed, for their FOMC meeting, is going to be deciding the interest rate on what they're going to be doing for the effective federal funds rate, how that affects inflation, what they're going to be doing for their balance sheet, the crypto fear and greed index. We're getting into some charts comparing to the stock market, the total crypto market cap, XRP to the US dollar price chart, and then some other massive things we need to talk about in terms of Bitcoin's halving and how that affects XRP's price chart. So comment 777 if you're feeling blessed, comment 777 if you're feeling bullish. And if you're going to become the first millionaire in your family tree, you know what to do. Let's run it. All right, bull runners, welcome back. So the first piece of news is U.S. Senator Elizabeth Warren introducing this bill to require the Financial Crimes Enforcement Network to issue guidance on digital assets and for other purposes. And so, there's a certain percentage of, politicians and people with the higher ups that want crypto to be regulated in a positive light, but there's also people that want it to be completely cracked down. And usually those are the people that, like Jamie Dimon, right? He doesn't like Bitcoin. He doesn't like crypto because his shareholders in JP Morgan Chase, they're going to take money out. And then Elizabeth Warren, just as corrupt as they come, guys. So, that bill, we'll discuss what's going to happen in there in a little bit. But first, right here from Marty Party Music, okay? Not financial advice. Obviously, don't listen to me. All educational purposes only. Don't listen to Marty Party Music. Maybe listen to his music. It might be some good stuff. But this is all for you guys to do your own research. So I bring you the news, and then what you choose to do is up to you, because when you like these videos and you subscribe to the channel, you're confirming that you are okay with getting absolutely wrecked and losing everything in these markets. And we're all full-grown adults here. So if you lose money, you're fine with that, and you understand the risk, because it's very risky right now in crypto, especially with the macro market conditions on a potential economic collapse happening in a crash greater than 1929 on the horizon. So you're ready for that, all right? You're the type of person watching these videos that likes to eat dirt for breakfast, lunch, and dinner, and you thrive on crashes, and it just makes you stronger and better, because that's where more millionaires and billionaires are made than ever before. And short-term prices of crypto are simply the direction that liquidates the most leveraged traders on exchanges like Binance and now OKX, right? It's rising in dominance. These sudden movements have nothing to do with buying and selling of spot assets. These are to liquidate the gamblers, because there's long-term holders, there's short-term paper hands, and then there's the gamblers that are just YOLOing in their mortgage and their house payments that they just don't have the money to spend in the first place because they want to become wealthy. And, I get it. Greed creeps in on the crypto fear and greed index, and you want to become wealthy fast, but that's where the markets get you, right? Greed is always going to get you. And remember, centralized exchanges have full control over their order books with zero transparency and can enter an order they need to manipulate the price to the desired liquidation levels. We all know this. The stock market's manipulated, precious metal market's manipulated, even real estate's manipulated, crypto's manipulated. Guys, everything is manipulated. Every market's manipulated. So for people to look down on the crypto industry and say, I'm not getting into that because it's manipulated, yet they're trading stocks and they see that the top 7 stock companies are basically holding up the entire stock market, the big tech companies. So it's all fugazi. You just have to learn where the liquidations and where the liquidity is going to flow. And so this is way worse than naked shorting. It's literally a scam on Binance. And the official word is trading against the customer, and they do it because they can. Those in crypto for a while, are aware of this, and we expect it. Those new to the asset class are misinformed that these sudden wicks are people buying or selling their assets. And they're like, why did everything go down all at the same time, right? When you go to CoinMarketCap, this is why this is happening, guys. And you see everything down on the day, 9%, 10%, 8%, 6%, 9%, 8%. You're like, who's pulling the strings for this? Why is this happening? Well, it's the exchanges. Just like a car dealer, centralized exchanges can make their price whatever they want. This is why regulation is vital, and it's coming soon. Because imagine this. Imagine if, you saw all these leveraged long traders like longing the market right here at like $43,000, and you see massive amounts of leverage at like 5x, 10x, 20x, 100x leverage trades here. And if it goes just down a blimp, like 2%, 3%, 5%, they all get liquidated. So right here, this is on the liquidation heat map on Binance, Bitcoin to USDT to Tether, the largest trading pair for Bitcoin, right? You can see these trading pairs when you go on CoinMarketCap, you click the crypto asset in question, and then you click on markets right here, and it'll show you which exchange. So Bitcoin is the largest, and now which pair is the largest pair to trade against. So Bitcoin to Tether. That's why we've been seeing in my last video, we talked about Tether's dominance dropping because money's been coming out of Tether, going into Bitcoin, but not just on spot orders at just regular levels, guys, on leverage trades, meaning people are like, if you put in $1,000 and you're leverage trading at 200x, it means that you're trading with like $200,000 of money that you don't have. And so that goes on right here, this liquidation heat map on where these leverage long trades are at. And so yellow means it's just a massive amount, right? So in short, it predicts the price levels at which large-scale liquidations may occur. So the market's going to move in favor of liquidations because the exchanges, when it liquidates the leverage traders, what do the exchanges get out of that? They get the fees. They get the trading fees from that. That's why leverage is so risky, and you do not want to leverage trade unless you really know what you're doing. So this massive wick all the way down to Bitcoin to $40,000, look how much it liquidated in millions of dollars. Like right here, right around 43,500 was $165 million in liquidation. So it was bright yellow. And so they liquidated all those traders out. They made their fees. And now we can move forward in the next direction. Where is the next direction? What is the next, event on the horizon that's a black swan event or that could shake more people out? And why could more people be selling right now in anticipation of something? Well, the Federal Reserve Open Market Committee meeting is December 12th through 13th, so it's happening tomorrow, where they're going to discuss the interest rates that affects inflation, because they've been trying to bring back inflation back down to a persistent 2%, meaning that every year their goal is 2%. So their goal is to devalue your dollar. Their goal is for you to go to the grocery store and just get, massive amounts of price increases. And also, not only are you getting taxed at your job, but you're getting sales tax on the income that you're spending. You're getting homeowners tax, and you're getting taxed on your taxes. And inflation is just the hidden ghost tax on all the other taxes. So reality, when you're paying a 25% tax from your job, well, then you're paying a 5% sales tax. You're paying a bare minimum right now, 3.2% inflation tax, but it's even higher than that. This is not real inflation. These numbers aren't even accurate, guys. Inflation is most likely double what the numbers show right here. And so that's why they raised the effective federal funds rate at the fastest pace in history. So as you can see right here, over the past, few years, since February of 2022, they just started going up, and now they're at a pause. They've been holding the rate steady since September, October, and November. And the CME Fed Watch tool shows us how many days until the next FOMC meeting, 1 day, 21 hours. And it also shows you the expectation of what they're planning on doing, on the Chicago Mercantile Exchange, for how they're going to be raising the rates and how this affects the markets. I'll explain in a little bit. So right here, December, they're expecting 98.36% today is expecting them to hold the rate steady. No rate hikes, no rate decreases, just holding it steady. Back on December 8th, it was a 97% expectation of this. On 1 week ago, December 4th, it was a 98%. And then 1 month ago in November, 90%. So the majority was expecting them to hold rates steady. Now, what's going to happen in January? Let's see here. Well, the majority, 94%, are expecting them to hold rates steady. A very, very small percentage, like 20% were expecting, and this was a month ago, guys. A month ago, 20% were expecting in January for them to raise the rates by 25 to 50 basis points. And now, like virtually nobody, 1.57% are expecting a rate hike next meeting in January. And so, 4% are expecting a rate cut in January. So March, let's see March, when they're going to start cutting rates. So you can see it's In March, there's a higher expectation. 41.99% are expecting a rate cut, whereas 55.39% are expecting them to hold rates steady. And so still in favor of holding rates steady. But by May, the majority, 50.14%, are expecting a rate cut in May of 2024. Now, how much will they cut the rates? Will they do it in May? Will they do it in June? We'll see, because these expectations shift over time. But when you look at the effective federal funds rate on the maximum scale right here, the last few times that they've done this, the last time right here where they paused the rates, when they cut rates, then they started cutting them drastically. That's when we've seen market crashes. Not when they raise the rates, not when they pause the rates. We usually rally into the pause. And then when they start cutting rates, that's when we see a drop take place. And so what does that mean for the markets and where we are right now? Because you look back in 2000, it wasn't until December of 2000 that they started cutting rates. And that's when the dot-com bubble burst, because they were cutting rates in response to something. So the Fed isn't just going to go in there and just slash rates back down to zero unless something breaks. And what would break? Well, the key takeaways here is the Federal Open Market Committee meeting has held rates steady during most of their recent meetings, as well as the prior meetings, and the Fed signaled that rates could be on hold for the foreseeable future, but they will keep an eye on changing economic conditions, meaning that they're waiting for something to break, and when something breaks, they'll start cutting rates. That's basically what that means. And the FOMC raised interest rates to 5.25 to 5.5% at the end of July, marking the 11 rate hikes this cycle aimed at curbing high inflation. And the consensus among market experts suggests that the Fed may introduce one more 25 basis point rate hike this year. So this meeting, it's potential, but 90%, guys, 90% plus are expecting them to hold it steady. So most likely not going to be a rate hike to reach the 2% target, because when you look at the actual inflation rate, inflation went down 3.7 to 3.2% without them hiking it, with them holding it steady. So it's expected that they hold it steady again, see how inflation responds. If it goes down, then they're most likely going to hold steady in the next month's meeting. So we're going to watch this. So when November's inflation data comes out at if it's less than 3.2%, then I would expect them to hold the rate steady in January as well too. And some Fed watchers remain concerned about more interest rate increases due to risk of bank failures, stock market instability, mortgage rates, and global economic uncertainty. And right here, what happened on their Fed balance sheet. So the Fed issues QE, quantitative easing, when they need to stimulate the economy and they want the markets to grow, and they expect things to be great. They cut quantitative tightening when they have to pull back, when they're restrictive, when they're raising interest rates, they're cutting on their balance sheet. So as you guys see, the Fed has been cutting over the past year. And right here, total assets in millions of dollars back in March of 2023. This is when the bank runs took place. And when the bank runs took place, they had to add to their balance sheet, erasing months of quantitative tightening, and then tightening, and then they eased, and now they've been tightening again. So at some point, something's going to break, and they're going to have to add to their balance sheet again. Now, we don't know when that's going to happen, but when something breaks, then they probably will start cutting interest rates. They'll start printing money in response to it, and we'll see a temporary crash in the markets. And I would expect there to be a temporary crash in the crypto markets, temporary crash in the stock market, but then for them to issue quantitative easing, printing money, in the markets to rally back up again. So that's when we talk about a black swan event. We don't know what that is. You just have to prepare for that to happen, because the markets like to move to max pain first before we see new all-time highs. And so right now, also, the markets like to move to what's uncomfortable. So let me ask you guys this. Is it more comfortable, right? Let's say a week ago, because the markets are crashing right now, was it more comfortable to be buying or selling? It was clearly more comfortable to be buying. Everyone was getting into crypto. Everyone was buying gaming projects. Everyone's buying, the top 10 projects. Everyone was buying Bitcoin. So it's more comfortable to buy. It was more uncomfortable to sell. Now, where do the markets like to move? To what's more uncomfortable. And that's why we saw Bitcoin take this dip down to 40K, because the crypto fear and greed index shows greed. So the markets are likely to shake out a lot of people, liquidate the long traders, but we're still in greed. We're 74 out of 100. And so when we look at the macro in terms of max on where we've been in the past, we're getting up there, guys. So I would expect there to be a bigger correction on the horizon for the markets. And I'll explain based on my past videos when I expect that to happen. I still do think we could go a little bit higher in the short term, but leading into the halving, I'll bring up the charts and I'll show you the past halvings on how far before the halving we saw a correction and a crash. But first, the S&P 500 index. So the S&P 500 index is holding above this descending resistance in yellow right here as support. And since the high of December of 2021 for the stock market, the S&P, Bitcoin has been pretty correlated to the stock market. As you can see, there's been major periods where when the stock market, has rallied, so has Bitcoin. Bitcoin's rallied. When we saw a sell-off in Bitcoin, we saw a sell-off in the stock market. And then when the stock market, the S&P 500 bottomed, Bitcoin bottomed shortly after that. So within a relative period of time, within a month. And then we saw a reversal in Bitcoin. We also saw a reversal in the stock market as well too. And we saw the S&P get rejected in July from this descending resistance. We also saw Bitcoin get rejected from 30K. But recently, and this was actually in October, we saw a decoupling take place, in October, where when the S&P was seeing a sell-off, Bitcoin was seeing a rally from 25K upwards of, breaking 30K, then 40K, then where we are right now, whereas the stock market saw a sell-off. And now that the stock market's rallying, Bitcoin is seeing a sell-off right now. So they're moving in reverse to each other, even though there's a little bit of a delay. You guys can see right here, by the end of October, the S&P caught up, then the S&P rallied after that, whereas the S&P bottomed before Bitcoin bottomed. So it's hard to really correlate like how big of an effect the stock market and the crypto market are going to have together. But overall, on a macro scale, we know that if there's liquidity issues and liquidity crunches, these markets are kind of going to move in tandem. Something will move first, something will move after. But regardless, what I'm expecting to happen is this liquidation event to get bought up and for us to trade and consolidate within a range for about a month before we see the next leg up, leading into the ETF approvals. And right here, if we go back to the past and we compare from March 2020 all the way until November of 2020, we saw Bitcoin in an uptrend, and then we saw a correction that took 22 days to break. And, Bitcoin dropped from, actually, no, this wasn't Bitcoin. This was the total crypto market cap, dropped from about 596, about $600 billion, and it dropped 20%. And so when we compare the total crypto market cap right now, this dip that we're seeing take place is a 9% dip. If we were to see a 20% dip or a 22% dip, we'd come all the way back down to $1.25 trillion for the total crypto market cap. So the next level that I'm watching for support is about $1.4 trillion. If we continue trending to the downside, we don't see that get bought up and we break that, then the next stop would be about $1.25 trillion. And so 22 days is what it took back from 23rd of November 2020 until the 16th of December for the total market to break out. And then we trended even higher than that, and we saw these massive dips, on the way up. So nothing out of the ordinary here. The only time that we'd really need to reevaluate things if we start breaking below like $1.17 trillion or even $1 trillion. If we start coming all the way back down here, we start to see massive amounts of money flowing out of the market, then that would be at the backs of something really bad happening to the crypto industry to shake everyone out, and then we'd reevaluate where the bottom would be. But looking at total 2, which is the total crypto market cap excluding Bitcoin, so it's Ethereum and every single altcoin, we can see a breakout right here of this resistance that the total market cap has been struggling to break out from since August of 2022. So right now that we are seeing a breakout, we're seeing a back test right here. And as long as we can hold this zone as support, which is roughly between, $660 billion to $700 billion, it's a range. It doesn't need to be to an exact price level. Just like you guys can see, right here, this resistance was all the way up at 697, and then it didn't even come quite up to retest that. It retested at 659 right here. And so this sell-off taking place within this zone, if we hold this zone and it gets bought up, then I would expect us to range for an extended period of time and cool off, which is good for the markets. We don't just go green candle, green candle, green candle, green candle up to the frickin' beaches the moon, right? We have to see, rising, right? Green candle, green candle, green candle, a few red candles, consolidation for, a week, 2 weeks, a month, maybe 3 months, and then the next breakout. And so I would expect the chart to look something like this. For this to get bought up, maybe another sell-off into this range for us to consolidate, and then another pop within this resistance. And the resistance is going to be anywhere between $850 billion upwards of $950 billion before Bitcoin's halving. So leading into the ETF approval and the news that I'm going to get into with Google on why Google could be signaling that they already know what's going to happen and they're already prepping the advertisers to be able to advertise. But this is what I'm expecting to happen next. Consolidation period for us to form some sort of triangle formation, symmetrical triangle, right? Rising wedge, whatever it is, and then a break to the upside to retest this resistance, and then for us to see a deeper correction going into the halving, then for us to try and work our way out of here in 2024, something like this to take place. Now, looking at Bitcoin, I did talk about the 618 retracement. If we draw the Fibonacci retracement tool from the all-time high to the low of November of 2020, we've just barely breached above a 50% retracement that you can see right here to about 44K. I'm eyeing the $48,000 to $49,000 range to a 618 because that's what happened the last bull run, the bull run before that. Now, that doesn't mean that that's going to happen this time. Obviously, you're very intelligent. I don't have to insult your intelligence here. You understand that anything could take place, but right here with this sell-off, we're watching this upward trending support line right here. It's very, very steep because, we broke out from 26K and we've just been trading massively to the upside. So because we saw a break from 37K all the way upwards of 40K really fast, just as quickly as it comes up, it can quickly come down. So for you guys to act shocked that we're seeing an 8% correction to the downside when we've seen, this entire year, we've seen over 186% rally for Bitcoin while the Fed is tightening their balance sheet, while they're raising the effective federal funds rate, while the economy is on the verge of an implosion. This is amazing, right? This is amazing what's been happening in crypto. So it's kind of unordinary, it's kind of unorthodox that it's happening this way, but people are sick and tired of, keeping their money in the banks with the recent bank runs that have taken place, knowing that it's just as risky, if not riskier, to hold all of your money in the banks, right? If your net worth is $5-10 million and you hold it in one bank account, if the bank runs happen, you're screwed. You only are worth $250,000 insured. And that's if they can insure everyone, if there's massive amounts of bank runs. So to keep all your money in the bank, common sense would suggest that that's not even a safe move, guys. So everything's risky. Once you come to terms with that and you know that holding all your money in a bank account is just as risky as having some crypto, then welcome to the club, welcome to the casino. All right, here's what I expect to happen next. For us to see continuation on a sell-off to the downside, potentially to 39, 40K, and then for that to get bought up, consolidation period, one final spring up to the 618, and then a much deeper correction as we break this upward trending support right here going into the halving. Potentially, a retest of 30, 32K, maybe if it goes that deep into the halving, consolidation, and then 6 to 12 months after that for us to break and trade higher to retest the high and potentially go higher than that. This is what I'm expecting, right? 618 is where I see a lot of people getting ready to take profits. And also when we look at the Bitcoin stock to flow model in terms of how far away we are from the halving, and we base it based on the last halvings and when the correction or the sell-off before the halving took place. Let's open up the chart and let's show you guys this. So if I go back, let me make sure I'm on the right chart here. Okay, we'll talk about XRP in a little bit. If I go back right here to the last halving that took place in May of 2020, we saw Bitcoin peak out in July or June of 2019. So if we were to measure when the market started correcting before the halving then, that was 319 days, but that was a little bit different because Bitcoin just rocketed up from the low really, really fast, 193 days. And if we go back here, Bitcoin in the first 193 days since the low right here, Bitcoin didn't really rocket up that quick. It took a while. It struggled to break the 30K resistance. And so we went up somewhat fast, but then we consolidated sideways since May of 2023, and we didn't do what 2019 would have looked like. So 2019, if we would have seen that happen, it would have done something like this. We would have seen a 618 a lot faster, then we would have seen the markets come down like that. But because we consolidated for over 200 days during this period right here, it's obviously going to look a little bit different than 2019. But nonetheless, when Bitcoin's halving took place, 88 days before then, we saw the Black Swan event take place, and then rallying into the halving, consolidation sideways, then the breakout. How long did it take for the breakout to happen after that to break the high? It was 100 170, almost 180 days until November of 2020 after the halving. Now, we can't just base it on the last bull run. Let's go to the bull run before then, because we saw Bitcoin rally up before the halving, and then roughly 20 days, 22 days, I mean, give or take a few days here and there if we were to measure it exactly, 23, 22 days before the halving, we saw Bitcoin sell off. And then how long did it take after the halving for Bitcoin to break that high pre-halving that it rallied? It took about 163 days. So bad news here is that a deeper correction is most likely coming, and it could be anywhere between 20, 30, 40, 50, 60, 70%. 70% would be black swan event, economic collapse. That would bring Bitcoin back down to $13,000 from where we are right now. If we saw 70%, it'd be about $13,000. If that were to happen, everyone would be freaking out, and I will be backing up the truck big time for Bitcoin. I'll be buying a lot of Bitcoin because it's not going away, guys. And this would be a nightmare scenario for most, but a dream scenario for the long-time bulls if it would be to 70%. I don't think that would happen, but again, markets like to move to max pain, right? So where are we now? How far away are we from the halving? We are about, it's December 11th right now, so we're about 140 days. So for the deep correction to take place right now, it would be a little bit early. Again, the last bull run was different than the one before then. So this one is going to definitely be different. So this deeper correction could be happening right now. If we break this upward trending resistance and we just continuously see a sell-off to the downside before the halving, and then we rally into the halving, consolidate sideways, then work our way out of here, this could very well happen. But what I'm expecting is one of two things to take place, all right? This is what I'm preparing for, okay? Situation number one is we rally higher before the halving up to a 618, then we see a deep sell-off going into the halving. How deep that will go, I don't know. Nobody knows, but it'll be a healthy correction. It'll be like something like 20%, 30%, maybe 40%, bringing back Bitcoin back down to 30K. I think it'll be deep. It'll be 20 to 40 or 50%, something like that. And that would be with the Fed cutting rates rapidly, okay? So that would be 2024. Coincidentally enough, when I bring up this right here, this is what people are expecting in May, right? So people are expecting rate cuts in May. So for something to break and that to freak everyone out in the markets, and that's what I think would cause the crash in Bitcoin before the halving, even regardless of the ETF news. Okay, so the ETF news, people are buying the rumors, they're buying the hype right now. When the news takes place, eventually that hype's gonna wear off and people are gonna be like, okay, now it's approved. Why isn't the market past the all-time high? I think that's what's going to happen because there's still the Fed tightening right now. There's still the Fed, well, they're holding, but it's still tight, right? It's not easy to invest right now. Loan interest rates are high. Mortgage interest rates are high. The real estate market is inflated. So something's got to give and something's got to break. And then when it does break, then the Fed steps in and does what the only thing they know how to do, which is print more money to bail it out. And then we see a rally out of there. And so people say that this time it's different. The Fed can't do that forever. Well, they could probably do it for another 10 years. They could probably print money until 2030. In fact, the gross debt right now at $33 trillion is projected to grow to over $50 trillion by 2030. So they're most likely going to print for another 7 years. And so that's why crypto, I believe, is still going to trend higher. I think the stock market, the crash will happen. I just don't think it's going to happen in 2024. Could happen 2026, maybe 2031. I think they're just pushing that off because election year is next year. They don't want a crash to happen in election year. So maybe it'll be like a 20% correction, but not 50%, just so they can save face to get Biden reelected. So we'll see. Scenario one, we rally up to a 618, then we see a correction. Scenario two is the correction's happening right now, and the sell-off is happening right now, and it would be a 20 to 40% correction back down to 30K, and then we rally into the halving, consolidate sideways, and then we break out of here. This is what I'm expecting. Either way, right now, the risk, it's riskier to be buying in the markets than it is to be waiting. But then again, depending on how you're playing it, if you're playing the short term, right, the short term is risky, but the long term, it's riskier in the long term to be out of the markets and not be in the markets. Because even if, here's an example, even if you were to you bought Bitcoin right here at $44,000 and you had to wait until the end of 2025, for Bitcoin, if Bitcoin goes to 70K, if Bitcoin goes to 78K, you'd be up 77% no matter what. So in the long term, does it matter if you bought Bitcoin at 26, 27, 30K, 40K, if Bitcoin goes to 100,000, 200,000, 500,000, $1 million by 2030. You just have to focus on having passive income on the front end.
Are you looking for a way to make more money? If the answer is yes, I'm going to show you how you can earn an extra $100,000 in the next 12 months. This may sound crazy, but we are going to sell free money to business owners. Let me explain how this works. Business owners are required to pay FICA taxes if they have employees on their payroll. And these FICA taxes are 7.65% of the business owner's income. So what if there was a free program that was created that helps business owners reduce the amount that they have to pay in FICA taxes? Do you think that business owners would be interested in that? Of course they would. This free program will help the employer or the business owner save $700 to $800 per employee that they have on payroll on an annual basis. If you introduce business owners to this program, you will earn $5 per employee per month. So if you refer a business that has 100 employees, you will make $500 per month. If you refer a business that has 1,000 employees, that means you make $5,000 per month. This is an incredible way to create a long-lasting residual income. All you need to do is connect with the business owner and ask them if they'd be interested in saving money on their FICA taxes for free. I guarantee that they will say yes. This business has 47 employees and we were able to help them save over $37,000 per year. This business has 2,670 employees and we were able to help them save over $2 million per year. And this business has 659 employees and we were able to help them save $493,000 per year. So if you head down to the description below this video, you'll see a link where you can sign up as an affiliate. And once you sign up as an affiliate, you'll get access to 2 links. So you'll get a business application link that looks like this. I'll copy and paste this. There's a presentation that explains exactly what the program is and how it works. And a business owner would just click this link right here. They would apply, and then they'll immediately be able to book a call with one of the sales guys, one of the reps at Innovative Health, which is the company that created this program. When you refer a business owner, you will see those referred clients in your affiliate dashboard. And if you refer affiliates through this link here, those referred affiliates will show up in your dashboard and you will see your override commissions. You're going to be making $2 on the activity. Let's say that, your affiliate refers a business. That affiliate is going to get the $5. You will make a $2 override, $2 per employee per month. So if you're ready to build a residual income with this amazing opportunity, head down to the description below this video, click the link, and apply to become an affiliate. We will add you to our community and give you all the training and tools that you need to become successful. So thank you for watching this video today, and we'll see you in the next one.
Now, when we look at XRP right here, we see XRP sitting at 61 cents. I talked about this zone of support, which was resistance for an extended period of time, about roughly right around 55 cents within this range. So if Bitcoin continues to see a sell-off to the downside, I would expect XRP to see a sell-off within this range. And if we see Bitcoin plunge further, then I would expect XRP to drop back down to 45 cents to retest this upward trending support and also this horizontal support right here as well at 45. And then for this to get bought up and for us to reevaluate where Bitcoin is at that time if we don't see a break to the upside. Now, if we see a break to the upside, there's this descending resistance in white that we're watching right here. If we see XRP break this, hold it as support, and simultaneously we see Bitcoin break to the upside and do a 618 retracement, I would expect XRP to see a spring as well too to the upside. So obviously, 90 cents is the resistance right here. We'll see what happens with XRP. I'm a long-term holder of XRP, but the reason why I'm more bullish right now before the halving for us to go higher is because Google is announcing an update to its crypto ad policy. So the update will allow advertisers to offer US ads for cryptocurrency coin trusts starting January 29th of next year. Interesting how January 29th is when they approve it, and the window for ETF approvals is January 5th through the 10th. So Google defines the trust as financial products that allow investors to trade shares in trust holding large pools of digital currency. So in an email to Blockworks, Google said that the new policy will allow crypto coin trusts to serve ads targeting the United States, provided they complete their certification process and have voluntarily register with the SEC by filing a Form 1020G. Google further said that crypto trusts are funds that only invest in cryptocurrencies such as Bitcoin. These funds are closed-ended, they own Bitcoin for investors, and their shares are traded over the counter. Right now, Google's ad policies allows ads for NFT games, companies that accept crypto, and license providers of crypto exchanges and wallets. And ICOs and gambling ads and like staking NFT games are prohibited right now. So for them to approve Bitcoin ads for crypto trusts is bullish. So that's why we see the interest from November 26th and December 2nd to be projected to be at 100 out of 100 over the past 12 months. So it's going up in interest on Google. But when we zoom out, when in doubt, zoom out, where are we in the macro? So the interest on Google Trends shows how many people are searching for a specific topic. And if the interest goes up, then advertisers make more money and Google makes more money as well too. So Bitcoin was a 19 out of 100, November 26th through December 2nd. Well, and just recently, it came in at 29 out of 100. But when we go back to the last bull run, when we broke out from October 10th, we were at 19, then 20, then we broke upwards of 35, and then we saw a correction by December of 24, and then we broke out and we went to 98 out of 100. So what I would expect to happen is somewhat of the same thing. Sure, we're going to see dips and little peaks here and there, but we're at 29, guys. So we're undervalued right now in terms of social interest. And as you know, crypto is the people's currency. As Robert Kiyosaki said, gold and silver is God's money. It was created by God, created on this planet. Man didn't create it. And then fiat currencies is the government's money. The government created it, but crypto is the people's currency. It was created by the people. It was created by developers. Unless Bitcoin was created by the NSA, we don't know. But Satoshi Nakamoto, right, created it for the people to overhaul the whole system, right? Decentralization. So if that's the case, we need to be paying attention to social search volume, SEO, search engine optimization, right? So SEO shows us that Bitcoin is undervalued right now. When we get upwards of 90 and 100, then that's the time to be getting out of the markets. To be in the markets, the best time is when Bitcoin was at 12, September 30th of 2023, right? Interestingly enough, where were we in September for XRP? We were down at 46 cents. Where were we in September of 2023 for Bitcoin? We were down at September 11th, right? 9/11, we were at $24,900. The best time to buy Bitcoin before the rally was right here, right? Obviously, the best time to buy Bitcoin is when it started, but if you were late to the scene and you heard about Bitcoin in September, right here was the best time to buy. Coincidentally enough, the search volume was at 12 out of 100. It was very, very low. People weren't interested. Now people are becoming more interested. You're not late, right? But you're not the earliest. So you're just right at the precipice at the first 25% of this rally before we start to see the markets really go crazy. And then once Bitcoin breaks out and it does what we saw back here, from October all the way till January, I would expect that to take place with Google's advertising policies. And Google clarified that crypto trusts are not ETFs and are only available to investment companies, accredited investors, or high net worth individuals, and are not accessible to the general public. Institutional money, guys, that are going to be buying this up. And the updated policy coincides with a much awaited ruling on the spot Bitcoin ETFs. The language used by Google could suggest that spot Bitcoin ETF advertising is allowed if the US Securities and Exchange Commission gives the 13 Bitcoin ETF applications a green light. So the timeline, as set out by ETF analysts, targets a period in January for an SEC decision, with some eyeing the multitude of conversations being held by the regulatory agency and the ETF hopefuls as a sign that the commission is inclined to approve applicants, meaning that if one of them gets approved, multiple will get approved, and those companies are going to start deploying millions and millions and millions of dollars into advertisements to attract people that would invest in their ETF. So BlackRock, ARK, Fidelity, Franklin Templeton are among those aiming to get funds out the door. BlackRock's entrance into the race boosted the possibility of a Bitcoin ETF getting approved, since the asset manager has nearly perfect record of launching its funds. Bloomberg analyst James Safart expects the window for a possible approval to be between January 5th to January 10th, with potential approvals coming in the last 3 days. So by January 10th, put forward ARK shares, ARK 21. Right, you guys can see right here, Grayscale Bitcoin, ARK 21. The final deadline is January 10th right here. And then you can see some of these other deadlines for iShares, right? So January 10th, the third deadline for iShares, January 15th, but that can be pushed off to March 15th. January 14th is Bitwise. January 15th is Van Eck. January 15th is Wisdom Tree, then Invesco, then Wise, then Valkyrie, then Global X, right? And then you see March from there on out. But the third deadline for iShares, for Bitwise, for Wisdom Tree, for Van Eck, for Invesco could be pushed off until March, But if ARK shares gets the approval, then that's the green light that everyone needs. So the final deadline for ARK shares, if they delay this, then that could cause a little bit of a sell-off, right? That could cause people to panic. So the markets could rally into January. And then, hey, if they delay it, maybe Google changes some ad policies. So there's always that on the table because Google can shift some things around. But Google's getting ready for the approval. Maybe they know something that we don't. Well, they obviously do because it's freaking Google, right? Google has the AI on their side, but the SEC could technically make a decision on 9 of the 12 applications anytime before January 10th. So they're having meetings behind closed doors, and a settlement is coming with Ripple. Ripple's just going to have to pay a little bit of money, 20 million, 40 million, 50 million, whatever they have to pay. It's going to be less than the 770 million. XRP has the clarity already. They just need to get the last payment done to the SEC for wasting everybody's time. And Layla Halpern posted this on Twitter saying 7 lessons I learned from the 2021 bull market that you should take into this bull run. Number 1, have an exit plan. Don't just diamond hand forever. Diamond hands is a stupid term that people use to use you as exit liquidity. Okay. Number 2, rug pulls are inevitable. Any project could have a rug pull, and you can't take a rug pull personally. Number 3, this cycle isn't different than the last cycle. This time it's different because the ETFs. No, this time is going to be the same as it's always been. That's like saying, okay, so fall, winter, spring, summer. It's fall. You can see the leaves on the trees turn in colors. Winter's coming. You're like, no, this time it's different. I think we're going to skip winter and we're going to go right into summer. Okay. How long have you been on this planet for? Well, then when it's spring and spring's happening, you're like, nah, I think we're going to go right into winter. Sure, you could have some cold days in summer, but it's summer. Some summers last longer than others. Some winters last longer than others. But nonetheless, we just broke out of winter. We're in spring right now. We're getting ready to head into summer. So this cycle isn't different, but during spring, there's some cold days where the snow still hits in spring. That's what we've been seeing happen with this liquidation event. Number 4, all shitcoins will go to zero. And so that right there, very true, because Bitcoin, XRP, and some of the ISO compliant projects are going to be the ones to absorb the liquidity. So if you're trading a lot of lower market cap projects, you are being very, very risky right now, and you have to be very careful. Now, so number 5, those telling you to hold are selling. Those telling you to diamond hands are going to use you as exit liquidity. So don't be naive. You don't have to catch 100% of the top. You know, you could be taking profits on the way up. Now, obviously, do what's in your best judgment for yourself. For those of you that are getting really risky and you're waiting for the exact top, and if you're waiting for a 618 retracement before we see a deeper correction, that might not happen. The correction might be happening right now. So you knew the risk you were getting into these markets when you were buying in greed. So number 6, your Bitcoin will crash more than 70%. So if you think that being in altcoins is risky, no. Being in Bitcoin is risky. Being in everything is risky, guys. So the whole crypto market is risky. And just like I said, if you're telling your grandma at, Thanksgiving or Christmas dinner, and if you got her into crypto and you're like, don't worry, grandma, you're only down 55% on this currency instead of 90%. Do you think she cares? No. Do you think your family members care? No. When you're down over 50%, it's all down, right? It's all the same emotion above 50%. So if you're saying, well, Bitcoin only dropped 70 something percent, whereas altcoins were down 99%, nobody cares. It's down over 70%. So Bitcoin's going to crash over 70% no matter what. So why would you hold forever? If you're putting in $10,000, $100,000 in the market and it goes up 100% or up 200%, and you're going to hold that for it to drop another 70% and not take any profits on that, it's not money until you cash it out, right? Fiat currency, right? Cash is trash, but cash is also king still. Cash is king until they figure out the great reset and whatever they're doing for the currency for the BRICS and all that stuff, guys. But you still are going to have to cash out something. Arguably stable coins, but even stable coins might not be so stable. With USDC depegging and them coming in with CBDCs, you got to have some cash. Okay, you got to have some precious metals. You got to have some real estate. You got to have some crypto. You got to have some stable coins. You got to have some treasuries and some bonds. You got to be well diversified so you can be able to balance the storm when we do go into that deeper correction. So number 7, your favorite centralized platform will go bankrupt, right? FTX went bankrupt. Celsius went under. Terra Luna stablecoin depegged and completely collapsed. And so Binance, you saw what happened with CZ. They're getting him out the way. Coinbase, we don't know. Guys, you look at the stock market 200 years ago, all those companies aren't even around today. It's a new set of companies. And then 100, 200 years from right now, it's going to be a new set of companies. So companies come and companies go, but your brand is eternal. And so take a look at this chart and talk about it all day on Twitter Spaces, all day online. If you don't expect this to happen, you will paper hands and let us nuts your bags. We're in a bull run, and the market will pull back often with healthy corrections. And those could be big moves down. They're normal. It could be 20%, 30%, 40%. You saw during the last bull run, 38, 38, 33, 38, 36, 29. So 1, 2, 3, 4, 5, 6 major corrections before we reach the all-time high. So we're in a bull run, and the market will pull back with these massive healthy corrections. We don't just go straight up to Valhalla. Bitcoin is going to walk you around the block a few times before eternal riches and generational wealth is achieved. And so Jason Williams posted that. You know, he probably took some of that from Gary Cardone, Grant's brother. But you guys are very, very aware that long term, we're going up, right? Even if there's a economic meltdown and brings Bitcoin down 70%, we're backing up our truck all the way to the bank. We're grabbing the bags, packing them and stacking them, leaving no bags left behind, because we believe that the spending power of the dollar is going to continue to go down in value. That's a fact based on inflation. Blockchain technology, distributed ledger technology, and cryptocurrencies are going up in interest. That's the truth. And together we're going camping on the beaches of the moon. I'll see you on the next video. If you guys want to discover our top altcoin picks and get early bird access to our financial education platform when that's released, check out bullrunners.com in the description below. Click the button on the page. Put in your best email address. It's free to join our video newsletter. You'll get breaking updates right away, so you can see them first before the algorithm distributes this to you, because by the time these videos are, researched, recorded, edited, uploaded, and distributed, it's too late. And so you need to see them first. So you'll get instant access to that and our Telegram group and our financial education platform with our altcoin picks as well too. So I appreciate you guys. I'll see you on the next video. I'll see you on bullrunners.com. As always, you know what to do. Stay bullish.